So guys, with all the craziness going on, you may have actually missed this right here. And I just finished watching Chamat's interview on CNBC. Honestly, one of the best interviews I've seen. He's standing up for the little guy. He's pretty much pushing transparency and a few other things that I think needs to change on Wall Street. And during this interview, I came across this headline and I looked into it further, and I think this is setting a massive precedent. Here we can see TD Ameritrade, one of the biggest brokers in the US, has now decided to restrict GameStop and AMC trading in the interest of mitigating risk for our company and clients. So this is kind of the official post here. So they say security impacts related to market conditions. In the interest of mitigating risk for our company and clients, we have put in place several restrictions on some transactions in GameStop, AMC, and some other securities. I'm guessing some of the other big ones that are being heavily, shorted, and the short sellers are getting squeezed right now. Probably Nokia, Express, Blackberry, maybe, who knows, those names, right? But they explicitly say GameStop and AMC, and they say we made the decision out of abundance of caution amidst unprecedented market conditions and other factors. This is big because what this tells us now is that these brokers have control and they have kind of policing power to say, you're allowed to buy this, you're not allowed to buy this, you can buy this when we say, you can't buy this when we say, and that is dangerous. Honestly, I think this is a terrible move from TD Ameritrade. I think they need to reverse this decision ASAP. And I get the argument. I get that they're trying to quote unquote protect their clients, but are they really? Are they really trying to protect their clients? Or are they trying to protect their buddies on Wall Street who are short these stocks, who are losing too much money? And by making this move, maybe other brokers also follow along with that. And those hedge fund billionaires, hedge fund multi-millionaires are able to recoup some of those losses as once again retail is left holding the bag. That is what I think is happening here, and that is, I'm not a huge fan of that. I don't support that at all. I think TD needs to address this and reverse this decision ASAP. Now, a couple things from the interview here with Chamath I want to talk about as well. There's just some information here posted on CNBC. Chamath pretty much said that he closed off his GameStop position. I think he said he made something like $500,000 or something like that. Yeah, something like that. And he said he's going to be donating the profits to Barstool charity, I believe, or businesses. So good on him for doing that. I still don't agree with him gambling and kind of encouraging gambling, but at least the money is going towards a good cause. So that's good. But honestly, what I really want to talk about is how he spoke here on CNBC against one of the news anchors on there, and pretty much said some things that really hit home. He said that, all of this that's going on right now, Wall Street is up in arms because they're losing money on this, and the retail investors are making money, and people are making millions off of this. He was on Wall Street Bets, he said. He looked through, he saw people were able to pay off their debt, buy their house, pay their mortgage off, all these things that help the average American be more financially free. But Wall Street does not like that because they're losing money while the average person is gaining money. And he believes that the solution to all of this, what all of this is going to come down to, is more transparency on the institution side. And I completely agree with him. I think that institutions have been kind of, the winners for the last, however long stock market has been around for hundreds of years, right? They have always had the power to influence markets, just like how retail investors are influencing markets right now. Think about it. When a stock starts moving up big, large cap, small cap, doesn't matter. Up until now, it's always been because, guess what? Hedge funds pile in. All their hedge funds buddies, one of them upgrades the stock, the other one upgrades the stock. They all start buying in. They start pushing it higher on momentum, and guess who wins in that game? They do. Then they all decide, okay, it's time to sell. So they start selling, and guess what? Retail investors are left holding the bag. Now, this exact same thing is happening, except it's reversed. It's retail investors this time, pushing the momentum higher, pushing these stocks higher. Whether it's on fundamentals or not, it's the fact that they are the ones moving the market, and hedge fund investors are left holding the bag because a lot of them are short on these stocks. Now, I bet that there's a lot of hedge funds they're taking advantage of this, right? They're also probably playing this momentum move. They're probably making millions, hundreds of millions, possibly billions of dollars from all of this. We'll find out probably in a few months or years when all of this dust settles. We'll know who made a lot of money from this and who lost a lot of money from this. But essentially, the blame from media right now is being put on Reddit, on retail investors, and I just want you guys to know that it definitely goes much deeper than that. That's just my opinion, and I think that this is a fundamental shift that needs to happen in the market. Now, I'm not saying every stock should be and do what GameStop is doing, like up hundreds of percent every day kind of thing, you know, squeezing shorts. I don't think that's kind of the future of investing. But what I think that this is saying is that retail investors definitely have, you know, power if they all band together. And that's what's happening here with Reddit. And that's what's happening here with, you know, Wall Street Bets and GameStop, AMC, Bed Bath & Beyond, Express, Blackberry. You can keep naming a few of these names that have been moving massively lately, and it's been making headlines all over news outlets. Now, the last thing that Chamath actually touched upon in his interview, I don't know if they listed in here, is that he believes that that Wall Street Bets, like the DD on there, is actually quite good. So I know a lot of the stuff on here is kind of like, oh, look, I YOLO'd this, I made a lot of money. But he said that if you look through, there is a lot of good due diligence on here. And yes, these stocks like GameStop, they're not moving up on fundamentals. However, it's kind of the precedent that's being set right now where retail investors can be as good, if not better, than hedge funds. Retail investors are able to do as much research, are able to understand businesses as well, in some cases much better, and you know, when they want to make something happen, they make it happen. And you go through Wall Street Bets, you'll see a lot of interesting articles. You'll see things like, you know, feel good stories, people making a lot of money. And yes, eventually at some point, all of this is going to end. And yes, there are going to be people, regular people, especially ones on Wall Street Bets, that will get burned from all of this. That's usually how these things end. But I hope that all of this kind of sets a tone that things need to change in the financial markets. Retail investors do need more power. Retail investors do need more transparency. And retail investors are the future of the stock market. Guys, let me know in the comments if you disagree or agree with me. I had to make this video as soon as I watched that interview. Hope you enjoyed it. Don't forget to invest positively, and I'll see you in the next one. Peace.